What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro technical analysis and we'll look at all of the indices, the VIX and Bitcoin, and we'll also throw Arkk in the mix as well. So first up, let's take a look at the weekly chart of the SPX S&P 500 index. So let's crack open this chart. See what's going on in the stock market today. Alright, so just a reminder, every candlestick you're looking at on this chart is one entire week's worth of price action. So this is definitely a macro level view of the market, and we're not trying to use this information to make day trades or short-term swing trades. We're looking at big picture here. So the first thing you'll notice is that the S&P 500 is still in a very strong bull trend. And this is a bull trend that's been going on for over 2 years now, ever since the crash in 2020. So this is without a doubt a secular bull market, and keep in mind in secular bull markets there's always going to be corrections, and they could be anywhere between the magnitude of 10 to 15% and possibly even more. So I'm going to zoom in here, and the first thing you'll notice is that we're definitely looking like we're in a wave 5 here, which means once we do reach a top in this wave 5, we are going to see a full-blown correction to correct this 5-wave move. Now, how do you know you're going through a correction? Is you're going to see a break of the support level. So right now we have two very strong support levels, and they're basically in the same exact spot, and that's going to be our weekly 20 simple moving average and our support trend line, which has contained all price action dips going back through the entire bull phase. So that support level on the SPX is right around 45.74. If you're looking at SPY, that's going to be right around 456 to 457, and if we lose that support level, we're only going to have one more strong support level just below, right around 45.35. If we start breaking below those support levels, we are more than likely going to see the full-blown stock market correction, and that's going to more than likely take us back down to levels of 43.50 or 41.58, and yes, we still could go lower than that. Remember, nothing is going to happen in a straight line, but usually in the direction of the downtrend, you're going to go faster than you went up in the uptrend. So it's the old saying, the bulls take the stairs up and the bears take the elevator down, and that's exactly what that's trying to say. Now, another thing you'll notice if you look at my upside price targets, they were at 47.82 and 48.30, and we are continuing to bounce our head against the wall at 47.82, and we just can't seem to close above that level. That's apparent by the upside wicks, which is clearly selling pressure above that resistance level. So you can clearly see my price target is being respected as a strong resistance. Now, I would consider it a mistake if you just assume because it's resistance that we're not going to break above it and we're going through the correction now. While yes, that could be true, I don't like approaching the stock market in that fashion. I want to see the support level break down before I say the stock market correction is here. While yes, there will be more drawdown before we know the correction is here, that's the only objective way for me to know that the stock market is losing the bull trend and we're going through the correction. I can't objectively say just because we failed 2 weeks to break above resistance that we're going to correct, because there's always the possibility we're just eating time off the clock, gaining some momentum to blast through that resistance and going to continue to go higher. So on a macro level view, I'm looking for SPX to break out above 47.80 and 48.30 to get more bullish. And I'm looking for the macro level view to break down below about 45.75 to 45.35 to start looking for a much more bearish market. I'm just going to be patient, and that's how I'm approaching this year. And like I told you before, don't expect 2022 to be the same market that we had last year. And what I mean by that is we are very likely going to see a lot more volatility, and we are more than likely going to see that full-blown correction. I'm not going to sit here and tell you the correction is coming right now because I don't know, and nobody truly does for that matter. So wait to see the price action confirming that we're breaking down, and then we can plan accordingly. So what that tells you is you shouldn't be taking on too much risk at these levels, knowing that we could be coming all the way back down to much lower support levels. So if you're getting way too over leveraged on the bull side, knowing we could be getting rejected at resistance and then breaking down through support, by the time you realize we're going through a correction, you're already going to wipe out your account. So have good risk management here and understand this is going to be a much more tricky market, which means you are going to need to be patient and wait for price action confirmation. If you're not willing to wait for price action confirmation to make your direction and make your trades, then you're just going to get wiped out anyway, and you're not going to be doing this for long. So patience is part of the game, and obviously with patience comes strong discipline and great risk management. If you have great risk management and you're willing to be patient and be disciplined to your trading plan, you will be profitable no matter what the stock market does. I don't care if it goes up, down, or sideways. If you have a strict plan and you're sticking to it and you're being patient, you will remain profitable in this market. So now the other side of this coin is, what in the bullish scenario if we break above 48.30, where are we likely going? Well, the first place we could be going is our resistance trend line, which is right around the 4900s. And if at any point we break above the 4900s, it does look like SPX is trying to get to about 51.05. So the one thing I always tell you and the one thing that I always suggest you do is while we are in the bull trend, you want to be more biased to the bullish direction. The trend is your friend and price action usually moves in the direction of the trend. And while we have this bull trend, it still increases the probability that we are going to break through resistance and we are going to continue to trend to higher prices. So there's really no reason for me to believe that in 2022, the stock market is not trying to get to 5105. Now, there's no guarantee we have to get to 5105 before we see the correction. So there's still the possibility we come down to any of these support levels lower, see price action find support and bounce off, and then have a much later second half target of the year at SPX 5105. So what I mean by that is it's possible that yes, we go through the correction now, and then we hit one of these support levels, see price action bounce off, and then in the second half of the year, we see another bull trend that starts the SPX on the way to 5105 or higher. That's very likely, and it's one of the scenarios that I do favor, but just because I think something's going to happen doesn't mean that it actually will. It's just my opinion, and the stock market doesn't care what I think, and the stock market doesn't care what you think, so you need to have an objective approach that follows price action accordingly. So right now, don't rule out the possibility that we're not going lower first, and that we're just going straight up to that price target at 5105, and then possibly seeing the stock market correction before going any higher. All of these scenarios are possible, and when you look at the stock market, you need to prepare for any scenario. You need to know exactly what you're doing if we go higher, and you need to know exactly what we're doing if we're going lower. If we're going sideways, it's more than likely just going to be a boring market that won't have a lot of actionable trades in either direction, and that's just going to make a lot of people bored and start making bad trades because they're running out of time and they're getting bored. So just a recap of what we just went over is we still have the bull trend, so the highest probability chance is that we still continue to go higher. Now, the only way we know that's not likely is if we lose these support levels below. So the stock market is really that simple. The question is, do you have the patience to wait to see which one happens first? Because we have the bull trend, I'm still positioned to the long side because I know the odds are in my favor that the stock market's going to continue to go higher. If we lose the support level, I can reduce some risk and get ready to buy at lower prices. So that's exactly how I use the price action to decide how I want to trade this market. As we get towards support, I want to buy more, and if we lose support, I could sell for a small loss. But if we bounce off support and we start going to new all-time highs, I just made a great risk-reward setup trade, and I'm making a lot of money from doing so. So as we get closer to support and everybody is getting fearful and losing their mind, that's when you want to start getting more greedy. Remember, the stocks channel IQ test is whether or not you're buying near support or whether or not you're panic selling near support. If you're panic selling at support and you're buying at all-time highs, then you're failing the stocks channel IQ test. If you're getting more greedy at strong support in a bull market and you know your risk reward ratios are very good at support, then you're passing the stocks channel IQ test and you're going to be a very profitable trader. So that's all of the information I really think you need to crush this market in the year 2022. The question is, are you going to have discipline, patience, and great risk management? Because if you have those three things, you will crush this market this year and you more than likely will do very well. Jumping over to the bear bull survey, we can see that we have the perfect Goldilocks ratio. We have exactly 1/3 of the people in every single camp, so there's really no strong direction coming from the survey to tell us where the market's going in either direction. Now, I will tell you, and I like to do this every single time, if there's the majority of the people in neutral in the bear camp, that tells me there's either people shorting the market or going to cash, and that does favor higher prices. When you're in a bull market and you have a bull trend and there's a lot of people sitting in cash and shorting the market, eventually they will either get short squeezed or they're going to FOMO into the market and they're going to drive the market higher, short squeezing the shorts, causing them to become net buyers, and we will blast through resistance. So you actually want to get more bearish when you start to see more people becoming bulls, and right now we just don't see that many bulls. We only have about 1/3 of the people out there that are getting bullish on this market, so I do think that's a contrarian indication to say the stock market should continue to go higher. So don't just assume we have to go through a correction. If there's a lot of cash on the sidelines, it more than likely will mean the stock market has to go higher before it can go any lower. Jumping over to the NDX weekly chart, we have a lot of the same signs as the SPX, knowing that we're more than likely in this fifth wave and we could be going through a correction at any time. So looking at the NDX, you can definitely see a little bit of a weaker formation because the price action did close the week below the 20 simple moving average, so we are losing some support here. Don't ignore this, but we still do have a support trend line just below, right around 15,358. So we really need to see the support trend line breaking down as well. We still do have the bull trend, but yes, it's in jeopardy because we are slicing through support. So if we lose the bull trend and we lose this support trend line, we are more than likely going to see that full-blown stock market correction and come all the way back down to about 14,385. So from this week's close down to that support level is about another 7.6% drop, and from the all-time high down to there, you can see that is a full-blown correction in the magnitude of about 13.3%. So don't ignore these early warning signs completely, but understand we are still above our support trend line and we still do have the bull trend. So more than likely what could have just happened this week is we saw a lot of sector rotation because the NDX did so strong in the year 2021. A lot of those FANG stocks like Microsoft and Apple and Nvidia, those stocks are just simply being sold off so that there's money available to buy the sectors that are going to do very well this year. So we definitely saw a lot of money leaving the FANG stocks and going into the financials, industrials, and energy sector, and that's not really a bearish event. Yes, in the short term, it causes pain for the tech sector, but in the long term, it really won't do much of anything because eventually that rotation comes to a close and we can resume the bull trend. So I'll get a lot more cautious on the NDX if we lose this support trend line, knowing we're more than likely going to see that full-blown correction, but for the time being, I'm going to still give benefit of the doubt to the bulls. You can clearly see we are getting rejected at that resistance level and we're failing to close above it just like the SPX. But I really don't think the Dow Jones is going to be the last index to reach a peak before we go through a full-blown correction. I could be wrong on that, so stay objective and watch that support level, but I do think there's a good chance we hold above the support level and bounce and try to go higher. So to the upside, if we do break out above 16,573, I do have price targets at 16,932 and 17,365, which does mean we could reach a very important peak in the NDX as early as the middle to the end of January if we do start to see a very impulsive rally to that resistance trendline from these lows. Remember, coming off of lows and strong support in bull markets is usually very impulsive rallies, so don't be surprised if we see a face-ripping rally in the next 2 to 3 weeks and we see a V-shaped recovery from these lows. I'm not guaranteeing it has to happen, I just would not be surprised in the slightest if we saw it. We're going into earnings seasons in big tech in early February, and this is coming right off of a very strong support level, and you can clearly see we spent many weeks at this level. It's been tested multiple times, so if we do get a bullish bounce, it could be very impulsive. Jumping over to the Dow Jones weekly chart, you can see that we still have the bull trend in the Dow Jones, and just like I said in the NDX, the Dow Jones is actually looking the strongest, and we did see all-time highs this week. Clearly, we saw selling near the end of the week, but we were above the upper Bollinger Band on the weekly chart, so that's really not that surprising. These Bollinger Bands are expanding, and the Dow Jones looks like it's picking up momentum, so more than likely, we're about to see the Dow Jones outperforming the rest of the market in the first half of the year. There's no guarantee that has to happen because you can clearly see we are closing below resistance, but if the Dow Jones can start breaking out above about 36,330, we could see another very impulsive bull rally, and we could see this bullish momentum only gaining strength. So right now, the Dow Jones is very far away from critical support, so it's definitely looking the strongest of the three indices. You could see the Dow Jones went pretty much of nowhere last year, so if it does start to get a bullish breakout, it could start to run, and it could start going for that next leg higher. So watch as these weekly Bollinger Bands expand to see if the Dow Jones outperforms, and this could be a great place to leave some money for the year 2022, knowing there's going to be plenty of sector rotation. In the Russell 2000 weekly chart, we can see plenty of weakness, and we see the price action sitting right on top of the weekly 50 EMA, which has been holding up as support. You can clearly see more bearish momentum picking up as these moving averages start to go negative, but you can still see we're stuck in this trading range where we've gone absolutely nowhere, going all the way back to the beginning of last year. So I'm not sure it's either bearish or bullish, it's just really neutral, going absolutely nowhere, ping-ponging around between support and resistance. If at any point we can get back above about 23.34, it will look more bullish and we could see a new all-time high. And if at any point we start breaking down below about 20.90, it's going to look a lot more bearish and we could see a lot more legs lower. So right now it's just a trading range I would completely walk away from because you don't know where the trend is, and if there's no trend, you might as well go somewhere else that does have a trend. So I don't see any outperformance in the small caps for the time being because we don't see any strength in either direction. So I would walk away and wait for a more clear breakout below 20.90 or above 23.34 to know how to trade the small caps. On the VIX, we did close below 20, right around 18.75, and I still think the VIX needs to start closing above 20 to see more of that stock market correction, and we need to see a breakout back above 24. Now for the time being, we can see the VIX is making some higher lows, so we're definitely seeing some increase in volatility, but I think we saw the majority of that volatility spike in the end of November. So if we see the VIX start getting crushed back down below 15, Don't forget that we could see the VIX back down towards 12, which would go hand in hand with that secular bull market as we see fear completely leaving this market and we go back to new all-time highs. So critical levels on the VIX would be the breakout above 20 or the breakdown below 16, and then eventually the breakdown below 15, which will tell you we are going to that secular bull market continuation phase and we are going to see much higher prices. I know a lot of people don't think the stock market can go a lot higher from here, but yes it can, especially after a correction. Jumping over to Bitcoin, we can see that Bitcoin is looking a lot weaker and we're currently trading below that very strong support level that we did break down below, which was right around 46,000. We're back below the weekly 50 EMA and we're losing the support level right around 43,000, which means there's only really one support level left, which is right around 39,000 before we come all the way back down to $30,000. That will start looking like a bear market and it will look like Bitcoin's looking very weak. So if we lose that support level at 39,600, look for a quick trip back down to 30K to test that level as support once more. If we lose that level, oh boy, look out below because we could be going a lot lower, but we still have a long time to go before we lose those support levels because we've already liquidated a lot of the longs at this point that were over leveraged. If at any point Bitcoin starts breaking back above 51 to 53,000, it will be looking a lot more bullish, but wait for the price action confirmation. On the Arkk ETF, you can see that we are definitely reaching full-blown capitulation and we did see very high volume selling this week and we're getting very close to what could be the bottom right around $81.40. Below that, we could still go to about 78.5, but I do think the Arkk ETF is finally reaching a bear market bottom and we're due for a very strong relief rally. So look for strong support at 81 and 78, and if we bounce off of this, we'll be looking a lot more bullish on a break back above $99. This is clearly a bear market and we came all the way up from 160 all the way down to $80. So this is definitely a full-blown bear market that could be coming to a close in the very near future. You can see we have a full bear trend on the weekly chart, extremely bearish price action, but we are coming into a very critical important bottom. And if we lose this level, it's more than likely this ETF is going to go a lot lower, but this should be very strong support zone. So jumping back over the S&P 500, we are definitely at a very important decision-making point in the market where we're either going to lose support and see that full-blown correction, or we're going to chop around, blast through resistance and see another leg higher before we see that stock market correction. I do think you're going to see a stock market correction this year. I just don't know exactly when to expect it, but I do think there is a high probability chance that it does come in Q1 of this year. So don't freak out, don't panic sell, make a plan. You know your critical levels because I just gave them to you, and act accordingly. If we lose critical support, you're looking for the full-blown correction, and if we don't lose critical support, you're looking for continuation and higher prices of this bull trend. We're in a bull trend until we're not, and we're in a bull market until we're not. So there's really no reason to be overly bearish in my opinion because we are in such a strong bull trend. Don't forget all bull markets have corrections and they're great buying opportunities. So don't fear a correction, just prepare for one. Also remember that I do have bank trade alerts, which does very well in all market conditions and it absolutely crushes this market. It sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. You can see right here that bank does well in all market conditions, including bear markets like you can see in 2008. So if you're looking for some help to absolutely crush this market and you want exactly when to buy and sell, look no further than bank trade alerts. You can find out all of the details and how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. So if you're looking to join the Stocks Channel Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching everybody. I hope you're crushing this market. And as always, I will see you in the next episode.